Hey everybody, Ashley Page here. We're delighted that you're with us today on this educational vlog. Our topic today is it's become easier for companies to go public, and why does that matter to markets and your money? If you go back after the financial crisis in 2008, you may have noticed on some of our recent Monday morning vlogs here, we've talked about how many more companies are going public this year. Should be a banner year for that. And a lot of those are emerging technologies. Things like how you buy your groceries, how you get other products, how you get to and from the airport. We all know how that's changed recently. And so it's going to be very interesting to see this year with a lot of those companies going public. That gives you a lot more action, a lot more energy, a lot more confidence in markets. But specifically after the financial crisis in 2008, the Securities and Exchange Commission, or SEC, wanted to make it easier to help the economy for some of these emerging technology, emerging companies to get to market faster and therefore be able to raise capitalization, buy product, do whatever they need to do, hire workers. So back in 2012, we were about 4 years into the financial crisis, there was a piece of legislation called the 2012 Jobs Act. And what that did was, is if you were an emerging company and you had sales less than $1 billion, and the reason they targeted those at first is that's where a lot of the employment growth was after the financial crisis. You weren't seeing as much in online manufacturing, but you were still continuing to see it in high tech. So in essence, what they did is they made it easier for companies like that to go public, and here's the way they did it. If you see up on the screen, they call that a testing the waters legal provision. That worked very, very well. If you were an emerging company below 1 billion, what in essence that meant was you could go out and talk to institutional investors about what your idea was about going public. Again, you could test the waters before you spend a lot of money and time doing it. That was highly effective, and we're begin to see this year the fruits of that coming, and that a lot of those companies that were favored by that in 2012 are coming into public markets this year to raise capital and get larger, and that's great. The point we wanted to make to you is, though, that has worked so well, and it's a piece of deregulation that has helped to the point that last week the SEC decided that they would take the sales level off and open it to any type of company in terms of this test the water provision. So for example, if I'm a more boring type of manufacturer and I'm making this pen, I can still do the same thing that a high-tech manufacturer is that I can test the waters. I can go to my institutional investors and say, look, this pen is going to be revolutionize pens. We want to go to the public market, raise money, build a plant to make this pen. It used to be that this type of lower level technology, you couldn't do that with in these 2012 Jobs Act test the waters. Now you can. And the whole point of that is, regardless of the size sales that you are, regardless of the company you have, you can do this test the waters provision, which can get you to public markets faster. Why is that important? Going to public markets is a way to raise capital and for Americans to invest in you and international investors too. So when you go to public markets, it's a great way to get funding. What do you do with that funding? You get larger, you buy a product, you buy this table to work on, you hire other people. It's generally very helpful to the economy. So the faster you can raise money, candidly, the faster your company can grow, and you get money back out into the system that consumers can spend and rely on, and it helps markets. So we hope this is helpful somewhat. Another piece of SEC deregulation that's helping us go to market and helping markets in general. If you have any other questions about that, feel free to call me, Greg, or any of the guys on the portfolio team. You can get in touch with us by Facebook, LinkedIn, or Twitter, or do it the old-fashioned way and call us. We love hearing from you. And thank you for forwarding this vlog. We appreciate all the feedback we get. Have a great day.